Dear students, this is Dr. N. Srividya, Assistant Professor, PG and Research Department of Business Administration, JJ College of Arts and Science, Autonomous Pudukkottai. Now we shall see about accounting concepts and conventions. Accounting concepts are basic assumptions or conditions upon which the science of accounting is based. First, we shall see about business entity concept. Accountants treat a business as distinct from the persons who own it. It is necessary to record business transactions separately to distinguish the business transactions from owners' personal transactions. If mixed up, the true picture of the firm will not be available. The next one is money measurement concept. According to this concept, accounting records only those transactions which can be expressed in terms of money, though quantitative records are also kept. Going concern concept. It is assumed that the business will exist for the foreseeable future and transactions are recorded from this point of view. A firm is said to be a going concern when there is neither the intention nor the necessity to wind up its affairs or curtail substantially the scale of its operations. The next one is accounting period concept. According to this concept, though the business is a continuous affair, the life of the business is divided into suitable intervals for ascertaining the financial position and operational results at each such interval, which is known as accounting period. Usually, a period of 52 weeks or 365 days is considered as the accounting period. The next one is cost concept. According to this concept, assets acquired or ordinarily entered in the accounting books at the cost at which they are acquired, and this cost is the basis for subsequent accounting for the asset. The market value is immaterial for accounting purpose. Revenue realization concept. Accounting is a historical record of transactions. It records what has happened. Unless money has been realized, either cash has been received or a legal obligation to pay has been assumed by the customer, no sale can be said to have taken place or no profit or income can be said to have arisen. The next one is dual aspect concept. According to this concept, every financial transaction involves twofold aspect, giving of a benefit and taking of a benefit. If a business has acquired an asset, it must have given up some other asset such as cash or undertaken the obligation to pay for it in future. Accrual concept. The accrual concept requires that all transactions or events not yet settled in cash must be taken into account. Matching concept. The most important aspect of running a business is to ascertain profit periodically. The determination of the profit of a particular accounting period is essentially a process of matching the revenue recognized during the period and cost to be allocated to the period. Now we shall move on to accounting conventions. The term conventions denotes circumstances or traditions which guide the accountants while preparing the accounting statements. The first convention is convention of consistency. The doctrine implies that accounting rules, practices, and convention should be continuously observed and applied. They should not be changed from year to year. The next one is convention of materiality. Whether something should be disclosed or not in a financial statement will depend on whether it is material or not. Accountants should report only what is material and ignore insignificant details. The next convention is Convention of Conservatism. Conservatism refers to the principles and practices which are established by way of tradition, reluctance to change, and inclination to play safe. In order to protect the interest of different parties, the net profits and net assets must not be overstated but may be understated. The next convention is Convention of Full Disclosure. Accounting reports should disclose all the information which they are expected to provide. They are meant for the use of various parties and will not serve the purpose unless they disclose fully what is material. Thank you.